certainly there's going to be some momentary panic, I think, about the yen carry trade. I don't think it's over. I don't think it's dead. There's still significant interest rate differential to be taken advantage of. But I think the focus, again, a lot of people are looking to cover existing positions, shall we say, and yen carry trade could well be one of them that people are spooked about its efficacy going forward.
So it sounds like you're saying there's this forced selling happening. I mean, we did hear from some analysts earlier today. They're saying the dollar yen could get to 130 even or 143. What's your view?
Yeah, one day. I don't think it's tomorrow, by the way. I don't think it's this afternoon. Again, there's a you look at currency forward rates and you look at the currency forward market. It's an expression of interest rate differentials. Now, did Ueda-san shock the market a bit? Yes, he did. How intended was it that it would be that deep a shock? I don't know, but the impact is real. We were up to 161, we go down to 155, back up to 159, and now we're 145. And eventually, will it go back to 130? Yes, as interest rates normalize more. I don't know. My gut is that this intense market reaction was more than was expected. And so we'll sit for a little while until we see a bit more data that would support, frankly, what they do want to do. They want to normalize rates. Sorry.
No, you're going to finish your point, and then I'll come in, because I want to pick on something that you said earlier on.
I think the Fed and the BOJ are both equally important players in this. I think they both want more normal, if you will, interest rates. But I don't think the market data for either one really supports going to where they would most likely want rates to be.
Yeah, I think the broader narrative that I've been hearing about on the street is that the Fed wants to get less restrictive and the BOJ wants to get slightly more restrictive from here. So restrictive is the operative term. You said that Ueda-san actually shocked the markets. How is that the case, Ed? Just one day before, I mean, Lynn and I were talking about this at length, the market literally went with a foregone conclusion that there would be a 15 basis points rate hike, and which is why we'd already seen in anticipation of that BOJ decision a 5% move in the yen from a low of 160. So how is it that the BOJ actually shocked the markets? It gave the market pretty much what the market wanted.
Well, I think it's about directionality and size. Again, 15 to 25 is when you're starting from kind of 0 or 10. These are real moves. Are we going back to 1% in Japan? No, I don't think so. Not right now. Again, I think this is something the BOJ has wanted to do for a while. The data kind of supported it. Again, has inflation backed off a bit? Yeah, but is it still real? Yes. It's not the demand-driven inflation they want, but so be it. And everything's going to go on to commodities right now. The previous speaker, again, highlights it. Watch FX right now, watch gold, watch oil. Those are the three things I would be doing with my day to try and understand what the BOJ is actually thinking about as far as rates right now.